Another day gets underway at the London Stock Exchange. Within this building, the shares of 2,864 companies are traded every day. Of those, only 11 may be from Egypt, but at Egypt Capital Markets Day, it felt like more, as they and others came to call, meeting with current investors and on the hunt for new ones.
I think what is happening right now is that risk is back on the table and a lot of funds are in investment mode, so it's the right time to start meeting with your old shareholders, your current shareholders and possibly your new shareholders.
But risk is only back on the table if it is a calculated risk. Funds have been burnt before by frothy emerging markets and increasingly value stability.
We came last time when the markets were very much tensed and there was all of these negative expectations and the volatility in the markets now are coming with a very calm environment in relative terms, with interests of diversification of capital, with interest in, especially with the institutional investors like the pension funds and the portfolio managers to look for opportunities.
And there are opportunities. The country itself is returning growth of 4.7%, with some sectors like real estate and ICT growing at around 14%. And the MD of one of Egypt's biggest real estate development companies is bullish.
The last 18 months have been, a period where there was a lot of turmoil, where everyone is sort of reevaluating their position, their strategies, and essentially what's going to happen in the world as a whole. Egypt and the Middle East, I think, as the dust settles, have fared significantly better than expected.
One possible reason for this success: a series of timely economic reforms.
Egypt had embarked on a fairly far-reaching program of regulatory and economic reforms, and the presence of the Minister for Investment was also significant in the sense that he can give the perspective from the government standpoint as to what they're seeking to do and the progress that's been made so far.
The Minister himself is more modest.
Well, I think we were very lucky that we started to pursue the major reforms of the financial sector, of the supply side, of the trade sector since 2004. So when the financial crisis was to hit us, we're very much, I wouldn't say prepared, but at least we put the house in order.
Although some felt that global economic forces may have been more powerful than political ones.
Well, I think that the crisis has disciplined people more than the reform process, because it has eliminated the speculation, eliminated a lot of the crazy leverage that was happening just because of access. This sensibility factor coming back into investments is more important than the reform, because the reform pace is not as desired. It has not really achieved the pace that is expected.
Others might argue that the reforms might actually have been too effective. The investment environment in Egypt was considered so stable, it became a safe haven for capital at the peak of the crisis. The Egyptian pound has now strengthened to 5.6 to the dollar. For companies like carpet makers Oriental Weavers, this can cause problems in the export market.
So far it's been not in best favor, however it still have the flexibility to adapt any kind of strength or deterioration of the Egyptian pound. However, any kind of weaker Egyptian pound will help Oriental Weavers to boost exports as well.
Competition is tough. Investors have the pick of any number of locations, and Egypt has not been without its problems. Humphrey Gatungu was at the event on behalf of an equity fund focused on African investments.
Inflation was a very key worry coming off last year, very real to the extent that there might have been social unrest, but the response from the government was excellent. So we need to see that continuing to ensure that the investment environment also remains robust.
And that, it seems, is the key. There is interest, but it is conditional interest. As long as these conditions are met, Egypt should continue to attract inward investment. Although, according to event organisers EFG Hermes, the largest investment bank in the Arab world, FDI may increasingly be coming from further east.
Look, we've just came out of a crisis. It has affected all and every investors. But what I'm happy to see now, I started seeing investors from areas that hasn't been apparent before, like Asia. So I think that within the coming 2 to 3 years, the Egyptian market will see higher activity.
The world is changing. Just as Egypt will have to fight hard to stay ahead of increasing competition from countries like Turkey and South Africa, it seems London may also be competing with other financial hubs around the world to be the first choice of venue for future investment rounds.